Let me ask you something. What if I told you that right now, in July 2026, there are 6 real American companies, not shell companies, not scams, real businesses with real products, real customers, real catalysts, and every single one of them is trading for less than $1 a share? Not because they're broken, but because the market hasn't caught up to what's actually happening inside these businesses. I spent the last several days going through filings, earnings reports, clinical data releases, Meta, and government contract announcements. And what I found, honestly, surprised me. So today, I'm sharing all 6. No tickers until the full story is told. Because the ticker doesn't matter. The business behind it does. Stay with me until the end, because the last one I'm going to show you has an analyst price target that represents over 2,000% upside from where it sits today. And that's not a typo. Quick but important note before we go anywhere. I'm not a financial advisor. Nothing in this video is financial advice. These are high-risk, speculative stocks, and you could lose everything you put in. Do your own research, read the SEC filings, and please talk to a licensed financial professional before making any investment decisions. Now, let's get into it. Here's the thing about July 2026 that most investors are missing. Everyone is staring at the mega caps, Nvidia, Microsoft, Broadcom, and yes, those are great businesses. But the big money has already been made on those names. The next leg of opportunity, the one that actually changes your portfolio, lives in the places institutional money can't easily follow. Companies too small for the big funds to touch. That's exactly where these 6 companies live. And right now, several of them have catalysts that most of the investing public has no idea about yet. Let's start. Picture this. Las Vegas, 2011. A group of gaming veterans sit down and ask one question that nobody in the industry had seriously asked before. What if the rewards inside a mobile game were actually real? Not fake coins, not digital badges, real hotel stays, real show tickets, real dining experiences at actual venues. They build the platform, sign deals with major resort and entertainment brands, and create something that had never existed before in the gaming loyalty world. Players earn points inside mobile games, social casino titles, card games, solitaire, and redeem them for real-world luxury experiences. The company goes public in 2021. By 2025, annual revenue reaches $235 million. Gross margin sits at 75.6%. Positive free cash flow of $26 million. And here's the part that stopped me. The company is completely debt-free and holds more cash than its entire market capitalization. Let that sink in. The stock is worth less than the cash sitting in its own bank account. The stock fell below $1 in late 2025 and received a NASDAQ compliance notice. It transferred to the NASDAQ capital market tier to buy more time. 2 analysts carry a buy rating. The average price target is $3 against a current price near 47 cents. That's a company generating $235 million in revenue, trading at a valuation smaller than its own cash balance. Now stay with me, because this next one takes us somewhere completely different. Imagine you wake up one morning and you can't feel your legs properly. You go to the doctor. They tell you it's your lumbar discs. The discs between your vertebrae are breaking down, compressing, and the pain radiates down your leg every single day. Tens of millions of Americans live with this exact condition right now. Traditional medicine gives you 2 options: manage the pain with drugs or surgery. And surgery helps some people, but not all. Nobody had seriously found a way to actually repair the disc itself. Until one company in New York set out to try. Founded in 2008, they developed a therapy called BRTX-100. They take stem cells from the patient's own bone marrow, cultivate them in a low-oxygen environment that actually mimics the disc environment inside your body, and inject them directly into the damaged tissue. In their completed Phase 2 trial, 52% of evaluable patients achieved at least 50% improvement in both pain and function at 52 weeks. 52%! For people who had been living with chronic pain for years. And here's what really caught my attention. In May 2026, a Miami-based activist hedge fund filed with the SEC disclosing a 4.9% stake in this company. That's an outside investor doing their own due diligence with their own money and deciding that the market is missing something. Roth Capital maintains a buy rating. The average analyst price target is $8. The stock trades near 34 cents. But, and I want you to pay attention to this same company has a second, completely separate program I'll be coming back to at the end of this video, because that second program changes the entire story. Stock 3 takes us into the ocean, not into biotech, not into gaming, into the actual ocean. Right now, there are autonomous systems floating in the Atlantic and Pacific that generate their own electricity from ocean waves, run sensors and cameras and communications equipment for months at a time, and monitor maritime activity around the clock, without a single human crew member anywhere near them. The US Coast Guard is one of the customers buying these systems right now. Multiple purchase orders this year. Real contracts, not press releases. The company also builds an autonomous surface vessel, an unmanned patrol boat that can cover coastlines and gather data without anyone on board. As government and defense interest in unmanned ocean monitoring keeps growing, their backlog has grown sharply over the past several quarters. Revenue came in just under $6 million last year. Tiny company. But the analyst price target sitting out there right now is $1.50 against a current price of around 30 cents. Do the math on that gap. If this kind of deep dive research is genuinely useful to you, moved out. Hitting subscribe takes 2 seconds and it genuinely helps me keep doing this work. I research every single one of these names before I talk about them. Okay, back to it. This one is in the genome sequencing world, and I want to explain why it matters in a way that most people have never heard before. You've probably heard of DNA sequencing. Companies have been doing it for years. They read the letters of the genome. What they can't easily do is map the large structural architecture. Sections of chromosomes that are rearranged, duplicated, or deleted across hundreds of thousands of base pairs. These structural variations are directly linked to cancer, rare diseases, and genetic disorders. And standard sequencing misses them entirely. A scientist founded a company in San Diego in 2003 to solve this. They built a platform that stretches individual DNA molecules across nanochannel arrays and images them at the molecule level, producing a structural map of the complete genome that standard sequencing simply cannot generate. Cancer research centers, hospitals, and genetic labs worldwide use their technology. Here's what stopped me when I looked at this recently. At a major genetics conference in June 2026, study presentations using their platform grew 67% year over year. That's not a company losing relevance. That's a company whose technology is being adopted at an accelerating rate by scientists around the world. The stock is near its all-time low. H.C. Wainwright maintains a buy rating. Stock 5. Acute myeloid leukemia. One of the most aggressive blood cancers there is. Even patients who achieve a second remission, meaning the cancer went away and came back, almost always relapse again. The existing treatments haven't meaningfully changed the outcome for these patients in decades. A company founded in New York in 2012 developed a peptide immunotherapy. Tiny fragments of a protein found on leukemia cell surfaces used to train T cells, your own immune system, to recognize and destroy those cells. Think of it like sending a wanted poster directly into your body's defense system. Their pivotal Phase 3 trial reached 78 of the required 80 clinical events as of May 2026. The final analysis is imminent. The stock jumped 25% in a single day on that update alone. Their collaboration partner? Merck. across 5 different cancer types. The company holds $70 million in cash and recently raised an additional $51 million in warrant exercises. Maximum Group has a $10 price target on a stock sitting near 70 cents. And now we come back to that second program I mentioned earlier. The same New York biotech behind the back pain stem cell therapy. A completely separate platform, a completely different disease, and a completely different patient population. Most people know white fat, the kind your body stores when you eat more than you burn. Very few people know that brown fat, brown adipose tissue, does the exact opposite. It burns energy. It generates heat. Scientists have believed for decades that it could be harnessed against obesity and metabolic disease. The same way GLP-1 drugs suppress appetite, this approach would rebuild the body's own energy-burning machinery from the inside. This company is developing that, using brown adipose-derived stem cells to generate functional brown fat in patients with obesity and type 2 diabetes. In 2026, they launched a commercial biocosmeceutical product line, partnered with a physician network for independent clinical validation, and completed a key manufacturing milestone. The same activist hedge fund holds 4.9%. Roth Capital has a price target on this same stock, same ticker, 2 completely different programs, of $8. The stock is at 34 cents. 2 platforms, 2 diseases, 1 ticker at 34 cents. Now I have to be straight with you about every single one of these because I won't send you into something without telling you exactly what could go wrong. Play Studios has declining revenue and earnings that are getting worse, not better. The cash position is real, but the operational trend is not going in the right direction. BioRestorative and its stem cell programs are pre-revenue clinical stage. Phase 2 success does not guarantee Phase 3 approval, and the company has been diluting shareholders to stay funded. The Ocean Tech company has under $6 million in annual revenue. One lost government contract could fundamentally change the story. The Genome Mapping Company is near its all-time low for a reason. It has struggled to translate scientific adoption into revenue growth. The leukemia immunotherapy has $17 million in cash against ongoing burn. If the Phase 3 final analysis disappoints, this stock could collapse overnight. And the brown fat obesity program is even earlier stage than the DISC program. No approved product, no meaningful revenue, entirely dependent on future trial success. These are not safe investments. Every single one of them carries real, serious risk of total loss. Never put in money you can't afford to lose. Here are all 6 revealed. Stock 1, Play Studios, ticker MYPS, NASDAQ. $235 million in revenue, debt-free, trading below its own cash balance near 47 cents. Stock 2 and 6. BioRestorative Therapies, ticker BRTX, NASDAQ. 2 programs, BRTX 100 for chronic lumbar disc disease and ThermoStem for obesity. Activist hedge fund at 4.9%. Roth Capital, price target $8, stock near 34 cents. Stock 3, Ocean Power Technologies, ticker OPTT, NYSE American. Autonomous ocean defense technology, real Coast Guard contracts, analyst target $1.50, stock near 30 cents. Stock 4, Bionanogenomics, ticker BNGO, NASDAQ. Structural genome mapping platform, 67% growth in scientific adoption year over year, near its all-time low. Stock 5, Cellus Life Sciences, ticker SLS, NASDAQ. Leukemia immunotherapy partnered with Merck, Phase 3 final analysis imminent, $10 analyst target, stock near 70 cents. 6 companies, all under $1, all with stories the crowd hasn't found yet. Some of these will fail, that's the honest truth about this category. But the ones that don't, The ones that deliver on even one of these catalysts could move in ways that very few other investments can. This video is for educational purposes only, not financial advice. These are high-risk speculative stocks, and you could lose your entire investment. Always consult a licensed financial advisor. If you found this research valuable, hit that like button, subscribe, and drop a comment below. Which of these 6 are you going to research first? I read every single one. See you in the next one.